When you think about all the problems since the March '09 bottom, you've had all these problems in the news, and yet the market's gone up 90%. You've had all the problems in the news since the October 3rd bottom, and the market's gone up 20%. Now, that alone would make you cautious, because whenever you have a market move that way, obviously there are things overvalued. And I would say this, that the risk in this market obviously is a lot more than it was in March or even in October. And that is the reason when we look at that, we can see that this is the reason we've been selling some stocks and been raising cash, because of the fact that the evaluations have gotten to be pretty pricey in some areas. And then in the other parts of the market, we're holding the cash because as these stocks approach our worst case and buy points, we'd be buying them. So I think the answer to most of these questions is, as long as we factor everything into our evaluations and we operate on that discipline, it's the best place and the best way to hedge it. And I'd like to make a simple analogy, which I always use in talking to clients about it. A lot of these problems that we're reading about really don't impact the value of the company over the long run, but they might impact it over the short run. So everybody sells because of the short term, but they've sold something pretty cheap because over the long term it hasn't changed that much. For example, I use the example of if you're renting out a home. Let's say the house is worth $300,000, and it's based on the fact that you're getting X number of dollars rent. Well, if one of your tenants move out, over the next 3 months, you might not get any rent. Does that mean the $300,000 house is worth zero because it doesn't make any money? No. You may not make any money for 3 months. You might not make any money over 6 months. But people know that a $300,000 house, you're eventually going to rent it out. They take a look at the income stream over the next 5 years and say, well, we might not get 3 months rent, but over the next 5 years, we're going to get 4 years and 9 months rent. You put the evaluation on there, and now you're back to the $300,000. If you were to go by the news, then one day it's worth $300,000, the next day it's worth zero. But that isn't the way the world works, and that isn't the way it works with individual companies, because while their earnings may go down a little bit because of these events, over the long run, they own real estate, they own plant and equipment, they own sales organizations, they've got cash. And one of the things that I haven't seen written too much about in the news is that while everybody's worried about the financial condition of this country, the financial condition of America's corporation is the best it's ever been. We've got more cash on the balance sheets, the debt is down, and the companies are running pretty lean. And one of the reasons we've had this unemployment problem is because a lot of companies don't want to hire people because they're still uncertain about the future, and that's why we have record profits today. So these are some of the offsets, and that's why it's just that not simple just to sell out the portfolio and then miss out on some of these other things that are offsets.